Joining me now, Monish Pabrai, Managing Partner at Pabrai Investment Funds, along with Drew Kanaly, Chairman of Kanaly Trust Company, which manages $2 billion, along with Ron Insana, Managing Director at Insana Capital Partners and a CNBC Senior Analyst. Gentlemen, nice to have you on the program. Welcome.
Thanks, Maria. Thank you.
Thanks for having me.
Drew, let me kick it off with you. Have you made any changes to the portfolio in the face of this volatility that we've been seeing? What have you done with your money?
No changes, Maria, absolutely none. And you know, we get the GDP numbers today, and they confirm what we've been saying all along. So what we've got here is just a little profit taking, a little disconnect between the fact set of GDP and what the market's looking for out of subprime losses.
And when you say no changes, does that mean you're fully invested? Where specifically do you have your money right here?
We're still fully invested, and we're still looking very heavily abroad for growth in earnings and our portfolio's position.
Monish, what about you? Have you made any changes?
Nothing meaningful because it's in the noise level. You know, I think the change in the Dow for the month is like around 100 points, so it's very small. And no, nothing meaningful. There's one position I'm building, and I'm getting it cheaper, so I'm delighted about that.
Ron Insana, you made the point yesterday that oftentimes it's almost better to see a cleaning out, if you will. It's better to see a huge sell-off after a big sell-off so that you get the feeling that, in fact, the worst has been done, and then people will start coming in and finding opportunities. Yeah. Was today enough for you? Does today fit the bill?
Well, I'm not a technician, Maria, but most of the people you would talk to, whether it's Phil Roth at Miller Tabak or others in his business, would suggest that, you know, if you close below yesterday's lows on heavy volume, now, granted, people were probably cleaning out their books before the weekend, it may set up for some more pain, some more volatility next week. It doesn't seem like you've reached that overused word yet, that capitulation that you like to see in a stock market. We may be oversold in the short run, but the market is beginning to imply that this is more in the nature of a correction that has some ways to go than this last moment of the day was the final capitulation that everybody had hoped for.
Drew, interesting to note that the cyclicals were down 7% this week. The financials also a hard-hit group. Are you looking at any opportunity in those two groups specifically?
Well, the financials is no surprise. But on the cyclicals, and particularly industrial stocks, I mean, if you looked at the GDP data, foreign sales were excellent. So those stocks supplying foreign growth are going to continue to do well.
Maria, if I could,
Monish, yeah, go ahead, please.
Oh, the one thing I would say, Maria, is if you've got financials and cyclicals going down together, that might be an early warning sign that people are worried that this Wall Street problem is heading towards a Main Street problem. Again, not guaranteed, as we said yesterday, but when you see certain groups go down together like financials and cyclicals, then you have equal worry that it's both a financial market and a real economy problem potentially. So that's something that people should probably pay attention to for the next several sessions, if not the next several weeks.
Yeah, but Ron, can't it just be that the whole market went down and you know, most sectors were trading down? I mean, let's face it, when you've got the cyclicals going down, you miss an opportunity to attach the cyclical companies, those companies that are very tied to the cycles of the economy. Aren't they benefiting from the global expansion that is still intact?
Well, they certainly have been till now. But, Maria, you know, in my view, the markets are a forward-looking, not a backward-looking mechanism. And so at a certain point, if people begin to worry that credit availability becomes so tight that not just the deal flow slows down, but that the economy slows down and limits the ability of some of these companies to grow, then, you know, that's where the psychology shifts and eventually leads to something that's more economic rather than market in nature. Again, I'm not saying that this is what's going to happen, but these are the things that you have to watch step by step as this process unfolds.
Earlier today, Dylan Ratigan interviewed Hank Paulson, the Treasury Secretary. They talked about risk in the marketplace. I'd like to get your reaction to something he had to say. Listen to this.
What we're seeing is risk being repriced and a different perspective on risk, which I think is healthy. But what I've said is during times of benign markets, strong economic conditions, we can see excesses.
Is that what happened, Monish, that we saw excesses and it had to come out of the system in order to feel like perhaps new opportunities are created?
Well, clearly in some sectors, like let's say private equity, you know, the surge of lending at low interest rates, I mean, that's not sustainable long term, and it's it defies the long-term kind of, average what private equity has done over a long period of time. So yeah, certain sectors get overheated, people get euphoric, and then they pull back. So we'll see a more reversion to the mean in those areas. We'll see higher interest rates in those areas, and that's all very healthy, actually.
Drew, do you see any upset to the perfect liquidity story that we have been watching for so long now?
No, there's nothing upsetting that equation so far. What we're talking about is two very small spokes on the wheel. The combination of subprime lending and maybe what private equity has to pay for money going forward. If we look at something very simple, a very simple metric of just foreign country reserves for their currencies, that's over $7.5 trillion now, growing at 20% a year. I mean, now there's a big economic measure that dwarfs these other two issues.
All right, gentlemen, we'll leave it there. Thanks so much for joining us. We so appreciate it. Have a great weekend, gentlemen. We'll see you soon.